Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Carson here with a breakdown of the action in today's session and a look at how the week turned out. So on Friday, we saw the S&P 500 leading the charge above a key technical level, Ed.
Yeah, it was nice to see the averages do pretty well today. Really big turnaround from Tuesday. Want to take a look at a few stocks, Tesla, Global Foundries, and Pure Storage, which are setting up or in buy areas now.
We will get to those charts, but first let's take a look at the major indexes today. The NASDAQ up 2.1%. We also had the Russell 2000 up 2% today. The S&P 500 up 1.5%, and the Dow with a gain of 1.2%. So adding to this new winning streak here. But like you said, a very different picture by the end of the week than how we kicked off this short trading weekend.
Yeah, it was looking very, very, very close. We were sort of wondering, should we, be calling an end to the rally? Certainly there was an argument for it, but turned around, found support on Tuesday, didn't quite close below the July lows, just found support there. And then we bounced back. The NASDAQ today got above the 50-day line. I don't know about decisively. The S&P was a little stronger. I think it closed ultimately 1 point below the 21-day line, but they might still be adjusting those numbers. So we'll see.
Sure.
So I wouldn't say that's decisive. The S&P and Russell and some other indexes look a little stronger. Dow just missed it. You can see the S&P, nice day today. So that was really strong in that regard. The Russell getting above that, both of them getting to above the 21-day lines. The Dow tried to get up there. It just slipped under in the last few minutes. Still a strong session.
Right.
So very positive in that regard. And you have to say that the leading stocks have been acting better than the indexes. So there's a lot of strength in this market. You could probably argue that this market is stronger than the major indexes would have you believe, because Apple and Microsoft and some of those names, while some of them had solid Fridays, they really haven't been leading. They've been lagging. They're not having the greatest time.
And so we always want to be pivoting with various market conditions. You don't want to be 100% exposed in the middle of a really terrible bear market, but you can start putting more money to work when the skies are starting to look a little sunnier. So what does this week mean in terms of portfolio exposure and how investors should be incrementally adding exposure at this time, or what does this week mean?
Well, I think that, you certainly could have added along this week, and certainly by now you probably should be adding to it. I mean, it's like there's one thing you might have waited, but at this point, I mean, it's not a decisive clearing, but it's sort of like it's not indecisive either. It's getting there. And there is a little room to run to the 200-day line. That's the ultimate thing. That's where you really might, if we can get above that and get above those early August highs or the mid-August highs that where we hit resistance before, if we can do that, then I think it'd be strong. But there is some room, especially if there's any kind of strength in next week, to start really increasing somewhat, knowing that this could all turn around. I mean, you want to be looking for those opportunities, but I mean, just as we had, it just took 3 days to make things look a lot better. It would not take much to get us right back down to this week's lows, or a lot worse.
Very true. Let's also check in on RSP. This is the equal weight S&P 500 ETF with a gain of 1.4% on Friday for the week, up about 4.2%, outpacing SPY, which was up about 3.6% by the week.
Yeah, and this sort of underscores how those mega caps were sort of have been weighing on the S&P, because the RSP took hold, reclaiming the 50-day line on Wednesday, got right up just barely, then got some distance, then got right to the 21-day line the next day, then sort of really cleared it today. So that shows you where, aside from a few names, there was some underlying strength in here. And we saw it with the Russell and some other things. And obviously, there have been some leading stocks breaking out. So that's something just to give you an idea that there was some underlying strength above and beyond what the major indexes would indicate.
Right. And also 0T in X, the 10-year Treasury yield up about 0.9% today, kind of in the same range throughout the week, but well above that 3% mark and headed towards that 3.5% level.
Yeah, it was impressive to see the stock market do so well given how yields did. I mean, we'll note that the market did fall on Tuesday when we spiked up, and it's 6 straight weeks now, I believe. That's pretty relentless. It's not a surprise that the market had come under pressure during that time.
Hmm.
It's also, we bottomed right in mid-June. Well, what happened? Well, we reversed lower from that 11-year high of 3.48. If we go up any higher, that could be a situation where, like, how much can the market really move in that
Mm,
environment, or at least it might take a while to digest. So definitely something to keep in mind, because it's not every day. You can't just say bond yields go up, stocks go down, and vice versa. But
yes.
you go week after week, that's a pretty good correlation that one
Yes.
is versus the other.
There really is. So we'll be keeping an eye out for that. Looks like a key level we could be approaching, in addition to the 200-day lines on the major indexes, something to watch out for. But like you said, could be a little bit of room here. And underlying stocks are acting pretty well. So we'll be taking a look at some here soon. But just a couple more ETFs to look at to give us a sense of the sector action. So here's a look at XLE, the energy ETF, up 2.5% on Friday for the week, up just about 0.75%, but really kicked things into high gear on Friday.
Yeah, and it was like crude oil fell to like lowest levels since January to start the week, but ended up closing down 1 cent. So that wasn't so bad. And I think natural gas came well off lows as well. So that was a positive. So I mean, this was a sector that was looking beaten down. There's a lot of strength. This is always nice to see this coming back and not sinking the market with it.
Mm-hmm. And a lot of stocks in this sector looking pretty similar to the XLE ETF. We also have XME, the metals and mining ETF, up a strong 3.8% on Friday. So 6% gain for the week here for the metals and mining group.
Yeah, it's a positive. There's definitely some stocks, especially the steel names, that are looking good. And this is a positive for the global economy. If this is coming back up, that's a sign of strength in that regard.
Yeah, we were looking at Steel Dynamics on IBD Live this morning, as well as some other names in this theme. And maybe this prior pullback wasn't quite enough of a shakeout, but we did definitely get one in the last couple of weeks here, but a strong showing this week, no doubt. And then let's also take a look at the speculative growth area with the ARKK ETF, up 4.4% on Friday. Looks like a blip on this daily chart, but if you go on over to the weekly, should we put on our risk on hats, Ed? ARK up 10%.
Yeah, I mean, it's still below the 50-day and the 10-week line, but it had a really good week. There was definitely a risk-on attitude, but it was beyond that. Obviously, we saw a lot of things. There was a lot of broad-based strength this week. So uh, you'll see if growth names can
Yeah.
come back, because it was a few sectors, but now it seems like tech names and other growth names are coming on.
Yeah, this could be broadening out now. And so, speaking of tech names, let's take a look at Tesla, because it also had a strong showing this week after a pullback to the 50-day line, a reversal from that level, gaining 3.6% on Friday. For the week, up almost 11%. And Ed, it looks like, although it did hit resistance at that 200-day, 40-week level, the pullback that it saw prior to this week was fairly orderly in declining volume. So seeing Tesla up 11% also seems like, at the very least, is a good sign for the market.
Oh yeah, and that's definitely pulling that. It's sort of arguably got above the 200-day line, the 40-week line. Maybe you could say at this point, like if you didn't take advantage of it, wait to at least get above 300. I mean, wait for the extra 30 cents, on that. But there's also the 314 area. It's still, even those things, those are still pretty low in the base, depending on what you call it. But there's arguments there. I would say that a couple of downsides, yeah, this is still low in the base, and the
Mhm.
volume was really anemic. Yeah, the weekly volume, it's a 4-day week, so you can take that into account.
Yeah.
But even so, really light volume day to day. So there's that. There's been other stocks like that, so just keep that in mind. But definitely strong action, nice bounce off the 50-day line, retaking levels here. So this is the only mega cap over the 200-day line that I can think of. So that was a pretty strong action.
Yeah, and we had Charles Harris on IBD Live this morning. And of course, those who know him know he's a big Tesla bull and has been in Tesla for quite a long time and trading around a position he has been adding on the touches of the 50-day line and of this bounce. But for those maybe who don't have the same level of conviction that Charles has, if we covered up the ticker here, Ed, it seems like, yes, round number at 300, resistance at the 200-day and 315. Seems like you would want those levels to get cleared. It's still 26% below its highs from the beginning of the year, but maybe from here, it can stay above that 200-day line and form a new base or another pullback, let that 50-day line catch back up. Maybe that could be another buying opportunity if investors wanted to wait to see this stock get above not only that 200-day, but some of those other resistance levels too.
Yeah, and look, the stock outperformed this week, and I guess a little bit underperformed last week or the past couple of weeks, but the relative strength line didn't really move that much in the last several weeks. If the market does well, Tesla and most stocks are probably going to do well. I mean, this is why we talk about like why clearing these key levels and the market rally gaining strength. If the market reverses lower, Tesla is almost certainly going to go down, like everything else. I mean, don't get me wrong. So I think that's one reason why it was probably safe to wait a little while. Wait to see if the market can strengthen. So, but the market and Tesla are both picking up some steam here.
Mm-hmm. Yes, battery-powered steam, other kinds of steam, but steam nonetheless. Let's also take a look at GFS in the chip space, Global Foundries, looking like an interesting setup here. Pretty quiet action on Friday, but it's been working on a handle, maybe a messy kind of double bottom here, Ed. I'll also change the view for our viewers to standard price scale. That's a little easier on the eyes, but pretty orderly pullback here as well after that strong move on earnings.
Yeah, you can be a little more forgiving. We're in a bear market. This was an IPO, and it is treating orderly now. Now it's acting a little better. It's found support on the brand new 40-week, 200-day line. That's the black line that just sort of finally just sort of popped up there the last few weeks because it's pretty new. It'd be great if this handle could just keep going for a couple weeks and get a full-on base. It probably needs a couple more weeks for that, but looking pretty strong in that regard. And so, you know, if it did break above like a downtrend in the handle, you could probably use an early entry again. Nice to get that handle. But there was some strong volume earlier this week. Today it was sort of flat in light volume. So this is definitely one to watch. It's nice to see some of these tech names, chip names coming up. This was our stock of the day. So, you know, it's a good one to read about, learning more about what this company does.
No doubt. I guess the one issue though, Ed, is on the one hand, it's positive to see these tech and chip names starting to bubble up to the surface, but at the same time, the broader chip sector is still struggling. So how much of a concern is that this isn't quite yet a leading industry group? Are there enough names or enough peers, even loosely speaking here, that can give you some comfort in terms of the group strength?
Yeah, that's a good point. And there's a few names like Global Foundries and a few others, and some of those other ones have specific niches that are doing well. But this is, yeah, the chip sector is clearly not leading, and so you'd like to see some more strength. It was a good week for chips, but yeah, you'd like to see a lot more strength in chips to make you feel more comfortable. So yeah, I wouldn't load up all your money, put all your chips into chips right now, even if they are the better ones. It's a good point because that group strength is 91 and it feels almost weaker than that. So, you know, it's always nice to have friends going along with you.
Well, like you said, if the market can continue to pick up steam, maybe we'll also see more of these chip stocks participate, because you're right, GFS isn't a lone wolf. It just doesn't seem like there are quite as many options, you know, as big of a selection in that area of the market as there might be in some of the other industry groups and sectors that we have an eye on. So just something to keep in mind. All right, well, last but not least, let's take a look at Pure Storage, PSTG, with a strong move on Friday, up almost 4%, had some nice volume, behind the move on this short holiday Friday week. But what do you think about the action here, Ed? Is this showing enough relative strength for you? It's definitely on the move.
Yeah, I think so. I mean, it's like it would be nice if we were at an all-time high, but it's definitely the highest in several months. It's the high, it's right basically at the highs, right almost at the handle high. You're talking about some of the steel names. This one had a tiny, tiny handle and it tried to break out, and it was
Yeah.
right around the time when the market peaked. It was not a good time to be breaking out. And so it came down to that more of a shakeout. Had even some trouble on earnings, even though the earnings looked really strong. Nonetheless, but it's found support at the 50-day line, found support at the 200-day line. Today it moved above the 21-day and crossed that trend line, as you say. You could argue that, oh yeah, in that sideways, it did hit resistance maybe around the old buy point. I think you could buy it here. You could, wait to get above Friday's high. But yeah, some nice volume. There's some nice growth here. The PE is something, and I hadn't really noticed, like that's doing pretty well.
Yeah.
The data storage is pretty broad, and that does include Micron, which is a chip name that is not doing very well. So sometimes you have to look at that. That's not a good group, but there are definitely some positives with the growth, with the valuation. I do like the shakeout. I think this was added to Swing Trader today, as they saw that action today.
Yeah. Nice clearing of a trend line, bounce above the 21-day. Gotta like that. Ed, let's also get your perspective of the weekly chart. What do you think?
Well, it was a big sell, but there was some shakeout on that volume that prior week, but there was also some support in there. So that was, that was sort of mixed on that. I think that's looking pretty good. I think it looks better this way, actually. Looks a little more orderly. I mean, it'd be nice if the relative strength were higher, but it's not too far from the highs, that were set at the beginning of the base. So this is a lot of positive action. Just look over the fundamentals. I mean, they were there on the daily chart, but sometimes it's nice. There's some pretty strong growth here, and some of those comparisons are getting tough, and they're still churning out some good growth. So nice to see all that, because a lot of the stocks that are growth, we're seeing decelerating growth or growth that's going to fall, earnings that are going to fall next year. Nice to see one that has some solid numbers here.
Just curious about the sponsorship. We do have Contrafund initiating a small position in the most recent quarter, so that is definitely interesting to see. And then more broadly, looking at the fund ownership summary, we've seen a pretty steady uptick, at least in the last couple of quarters, of funds owning this stock. So that checks off another box.
Yeah, it's always nice to see some smart money actually saying they want to plunk it down before you put your money in there. Some smart big money, and then so yeah, the funds are starting to come into this one.
All right. Well, thank you, Ed, and thanks everyone for tuning in. Coming up at 5 p.m. Eastern, join me on my YouTube channel as I host hedge fund manager Jim Ropel to get his thoughts on current market conditions as well as stocks on his radar. We will also preview our session that we are going to have at the upcoming Market Watch Money Festival, where Jim is going to talk to us all about how to ride the wave of the big winning stocks, something that's definitely made his career. So we'll take all the tips from this seasoned CanSlim hedge fund manager. So make sure you look out for the link on my Twitter handle, channel, page, whatever you want to call it. And I will see you there at 5. Hope you have a great weekend, everyone. And the team will see you right back here next week.